Welcome back, everyone. This is the London session on TopstepTV. I have a little gold trade idea, so I'm going to explain that in a minute while I wake up. Okay, so let's see what we've got. Gold fell out better yesterday. If you're here for the first time, my name is Deeyana Angelo, aka Market Stalker D, and I've been trading for about 17 years now, 12 years out of that. I have been trading futures for various prop firms, and here we are. All right, so let's have a look at gold from a very, very long time frame, large bird's eye view. Maybe some volume profile there. Okay, so we're reaching, on the daily chart, we're reaching that area of demand. We've literally just touched it, right? We touched that conterminous line, and it is in a little bit of a lower volume area, even though we have a lower volume area at 25.75, but you know that's quite a ways off because this is such a large time frame. Manfred is asking me, since when am I wearing glasses? Since I'm almost mid-40 and my eyesight is getting a little bit tricky. Something you might not know about me is that I was blind as a bat for most of my life. And then in 2010, I actually did LASIK eye surgery. And I went from like -6.5 in my eyes to 20/20 vision. So, you know. So yeah, I've worn glasses for let's say, you know, 30 years of my life. But yeah, and then for 10 beautiful years, 15, 14, whatever, I didn't need any glasses. I had perfect eyesight. However, in the last sort of couple of years, I keep noticing that I can't really read stuff and it's a little bit fuzzy. And it's weird because my right eye has gone into a bit of a minus, but my left eye is going into a bit of a plus. So it was all like, ugh. So I found that I was getting some numbers wrong. So I went to the optician and they said, yes, you need glasses. So every so often, if I'm feeling a bit tired and I don't want to be like doing squinting and straining my eyes, I will put these on, okay? And that's probably going to become more frequent as I get into the sort of the 6th decade of my life, right? Nobody's getting younger, guys. But yeah, so this idea of long golds, we had this demand here. It did get broken. But since we had such an extended move yet again overnight, can we just keep falling without any mean reversion? Yes. But what is more likely? So after such a big down day, and you know, this has been going on for a while now, I reckon we might be in for a bit of a breather. No evidence of that just yet, but I'm just going to tell you the levels that I have. Now, yesterday, gold went into a complete abnormal day. What do I mean by that? I mean, it started Asia session by smashing through the adverse daily range low, and then it just carried on. So whenever, and I think John Jones yesterday in chat, he was like, oh, what do you mean all of your orientation levels are gone? And what I meant by that is that I had some levels that I was looking at. They got traded through completely. And now you're sitting there going, well, this is just down. It's like, point, click, and pray, PCP, the old way of trading. That's something that I don't like doing. It doesn't work for me. I perceive it as a lot of risk. So whenever the market's going to start falling out of bed or skyrocketing, it is very difficult to limit risk properly because you can still be in danger of a big pullback or a decent pullback that whips you out and then carries on. So I prefer to have normal days, okay? Normal days where we have price action behaving and not just breaking through every single level here. So what I've got around this 2600, why I think it's interesting, and again, full disclaimer, this is not a signal service. This is not anything else but my opinion of how I pick levels and what generally works for me, is to look for a confluence between some sort of options levels activity, which we do have. We have a lot of puts around 2600s. And then maybe try match it up with some of my other levels. But one of the things that I noticed this morning is just before I came on, buyers stepped in, and you're going to see that on a 100-tick chart once I fall down. And today, whoops, I keep doing this. Hold on, let me get the full screen back up. So now I'm willing to try this twice, actually, because right now, obviously this one was just, an idea, front running a trade, probably won't work. I would prefer when I have a setup where I have these put levels matching up my London average session range low or London average daily range low or something along those lines, where there is heavy confluence within a sort of a 30 to 40 tick range. Now, today, this range is massive, right? So I may have to try a couple of times to see exactly where they want to turn it around. However, for the first point of reference, I do want to see this back up over 2600 in order for the trade to really work out. So the London value area is miles away today. So that's not a level in play for today at all. So we would need to see some other levels intraday developing, and maybe VWAP can be of interest. And so overnight VWAP is located at 2614.2. 2614.2. So that is sort of up here. That's a big target, right? And I have my 70 ticks way ahead of that. So if it tries to make a run for VWAP, we're golden, right? Now, I always start with my disaster stop of 35 ticks, and I try to commit to it, especially if we don't immediately just run through it. And actually, this one went into some profit. So I'm willing to put, 350 on the line here. And then if we start getting some reversals and some momentum, which again could be a little tricky on some days for London, even though it does trend, it's not like an everyday thing. We don't have committed movement every single day. So that got a bit hairy, as you can see. But so far, it's holding that, I think that was Asia low just under there. Let's see what happens. It is over 2600. That's what I wanted to see. Now the next question is whether we can sustain above it. So it's one thing to kind of pop outside of it. It can easily just dip back through it. So what I'm looking for is a sustained reversal away from a level, and it has to exit that level too. So it can't be just, we had a reversal, but it's still sub 2600. That's not good enough. That's not a reclaimed level, yeah? So I want to see it reverse and stay above it, at least to hold into like a 15-minute candle, but preferably 30-minute time frame as well. Why? Because a 30-minute time frame has just about enough trading activity to not have false signals too often. All right, getting raked and Q not leaving IB for a London session. Yeah, that means it's a quiet day. So be careful trading NQ for the London session. It's an out-of-hours market when it comes to this time of the day. And if you find that you're getting paper cuts or you're just not getting that momentum for NQ or US-related equities, just don't trade it, man. Move on to something else. We've got so many other beautiful things that move. There's copper. Copper's kind of slowing down around ADR low. That's something of interest. I did see crude oil trying to go through some of the HVLs, which could be springboard areas, but we have value low on crude oil coming up. Just so here it is. I prepared this for you. I did my homework today. So here it is. 68.58 is London value low from yesterday. So I want to see what happens around there before I initiate anything, because I don't have anything options related until 67.75, and so there it is. And then lower down, where was it? So Asia low, and then the average daily range low is miles away. But just like gold, we had a massive down day yesterday in crude oil. So some sort of a relief rally is something that I would be expecting today. I can see Hoag's levels here. This is probably weekly kickoff low from what I remember, 68.50. And if we manage to pop above 68.50 and again sustain the price action, I might be interested in a value acceptance setup. Now, value acceptance means that you close one of the 30 minutes inside it, and it is one of the setups where I do like to wait for that. The London value is absolutely massive because we made this whole move down from yesterday. It started during London, right? So naturally, a lot of business was built in a wider area. And that can be a little bit unreliable for targets because, you know, I would be expecting yet another massive day today to reach this London value high, which would be the target for the value acceptance. So I'm not going to be doing that. But I will still be, if I do manage to get a trade out of it, I will still be shooting for my 70 tick target and taking my money and just being happy with that. All right, so we had an attempted GC move above 2600. On the first try, they failed. So this is something you have to be objective about. I'm going to go down to this 100 tick chart. So here we go. As you can see, they kind of started pushing. This is why I entered this trade. And you can see exactly where I entered, right? So we pushed up, started to hang quite a bit above this ribbon. But then it didn't work out on the first try. So let's see what they do on the second try, okay, and whether this survives. If it doesn't survive, that's fine. We're going to move on to something else because it means that the put support is giving way and it may be used as a back-tested level. So you break through it, falls away from it, comes back to it. At some point in the day, you might be able to use that to run a short trade. So it is a line in the sand, much like Hoag's weekly kickoff levels. But for now, we're just kind of wagging around this area from 25.97.5 and now establishing a new high at 26.021. And let's see if it stays in that range. If it stays in that range, it means that there's some kind of a price agreement happening. And even though I don't like scalping that, I would prefer to get in on a break of that very, very small structure for my trade. Some people might prefer to go, hey, like Dolby, you know, he loves ranges, sees a range, starts trying to get advantage of it, take advantage of it. I don't like doing it on such a small time frame, but if I see a range on a 30-minute chart, oh yeah, I will absolutely jump on that because that tends to change the day type expectation too. Keeping an eye on copper there on the other screen as well. But so far, there's nobody stepping in. That's not enticing me to trade it at the moment. So yeah, we have a couple of things we're looking at. You know, the old favorites, gold and crude oil today back on the radar. So yeah, let's take some questions. If you have any questions about how I do things and anything that I've just talked about, shoot them in the chat and Bruno is going to grab them for me. And I'm keeping an eye on the chat as well. All right. CZ, is it, do I remember well how your name is being spelled? Because I know I used to call you CZ and you told me that was wrong one time on my live stream. Said, I just saw your cute pic with one of your dogs on X. I'm rarely awake during this time. I actually haven't slept yet. Oh, happy to hear your voice. Well, thank you for being here. Thank you for tuning in. It's very good to see some of the old favorites, you know, who I used to see on my own live streams when I was still still doing them. Floppy says, hey Dee. Hello, Michelle. Tayo. I'm just going to see who's in here, you know, because we are getting some committed crowd that is always here. Dan Trader, EIP Cubed, that's an interesting thing. Odysseus, Side Trade, Teo. Right, so yeah, I keep seeing the same people here, which is very nice. Dave's Pirate Lives. I thought you were 29 and started trading at age 12. I wish. When I was 12, I was just starting on my third instrument, so I was already playing piano and flute, and then I decided that I want to be a pop and rock musician, so I then picked up the sax and I played that for, well, 25 years really. Mr. Meeseeks says, who is spamming emojis with me? I don't know. So yeah, thanks, Dave. Not 29, although that would be better, wouldn't it? But yeah, I try to take care of myself as much as possible. I'm going to say my mom looks really young as well. She's like 77 and looks ballpark like mid 50s. And she's always looked younger. My sister is 54. She looks about 35. So, there is a theme running in the family. I'm also quite small. So, my small size kind of contributes to me looking younger. However, be just very careful because these lights do forgive everything. My eyes have aged a lot. So I do have quite a few crow's feet, especially on one side of my face, probably because I sleep on it. So yeah, I do look younger for my age, but usually people give me 29 and I'll take it. So that's not bad, right? Okay, different trader says, I'm using ChatGPT for trading. I give it my trading strategy and my flaws. And every day before trading, I ask it to give me my rules, add-ons, and where to look at improve. I can suggest to all. Yeah, that's certainly a starting point. But one issue that I can see with that is, you have your levels, you have not respecting rules and blah, 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 and all of that. But really, let's talk about what causes that, right? Is it anything to do with the rules, or is it actually a mental issue? And unfortunately, that's something you can't really chart or backtest. You can't go, hey, I think I'm going to go crazy today. So it has to be a level of introspection that comes with, give me my rules. But then the other side of that is, I'm never following my rules, so what's the point, right? So I think you have to... traders are seen as these like cold-hearted, money-grabbing, money-hoarding people. But really, the best traders that I've seen, it's quite the opposite. They're actually very attuned to what is happening inside them. I'm seeing 106 contracts on crude oil here, so that's probably at 68.50. So I'm going to try something here. Let's try and hunt that, because they usually hunt it. But I don't exactly want to be hit for, and this might come back to bite me, lowering the stop to 19. Now, you know what? Let's keep it at 35. I'm trying to get this XFA up from off the ground, and it is 150K. This one, it's a little bit bigger. So let's see. Okay, so that just got hunted. Did you see that? They hunted it. Now, are we going to go above it? That is now the real question. I'm now in a decent position here where I'm in 4 ticks below this weekly hoax level. And he takes in the options activity as well when he's reading where the market makers and big institutions should adjust inventory. That's how he gets them. And of course, he looks at open interest. He looks at a whole bunch of things, support resistance levels, supply and demand. And then he comes up with these like magical levels. But they're very similar to what I use when I look at puts and calls and some of the gamma exposure levels. I used to look at it, I see a question about that. I used to look at it just on like bar chart or something, or even I used to like look at motive wave that, they have like options and stuff. And it's really annoying because it's like a very complex stuff, and there's a ton of data in there, and then you have to sort of sift through all of it and then come up with a line on the chart. Well, luckily these days we do have certain services. I think for SPX there's TraderAid, and then for all of the other alternative markets I actually use a service called Mentor Q. So it's not Mentor but Mentor. TH. And we've all mentioned it. Anne Maria's mentioned it. I've mentioned it. I think Jared J has mentioned it. So, there are a few people who rely on Mentor Q QueryBot to get like those strings every day and just see where the options activity changed. Now, take note that this is actually the previous day's information. So it is lagging, but it's still very useful to know where some of these options, and when you look at the options activity day to day, Usually the same prices keep popping up, so it's not like they're going to be markedly different from day to day. It's going to be like, oh, hey, 2600 yesterday was maybe like an area of a call resistance, but maybe you go through it, and then today it becomes put support, or or a high volume level that can just run the price through and things like that. So it's always kind of the same levels flipping around, and then every maybe 3 or 4 days you might find that we are kind of going for new levels that change maybe by about 50 ticks or so. And again, it's going to be logical. It's going to be around the round numbers, or in crude oil 0.25, so 25 cents. So it's not like, oh my God, why do they have this here? Well, because it's a round number, right? And it draws interest. All right, crude oil is starting to move. Let me just increase my... Oh no, that's the personal daily loss limit. Yeah, no, that's okay. All right, yeah, no, I don't need to adjust anything. I thought this was my personal target, and I am trading with 2 contracts here, max size. This is something that I will do when I'm away from the live stream, and I suppose I'm getting a little bit more comfortable now. Obviously, there's a lot of stuff going on when I'm doing a live stream. You have to, especially if I have guests on. I'm doing... I'm doing production side. I'm trying to flip between the guest screens. I'm trying to make sure that the audio is right. I'm trying to grab the questions that Bruno is so lovely to help me with. And I'm trying to keep an eye on the chats and make sure that everything is running. And then you try and trade, right? So people are like, why don't you trade your live account? I've never seen you in live. Because, the live account should be given full focus and not, focus that's been diluted over like 10 different things. But clearly I'm getting a little bit more efficient now doing these because... I can kind of digest information pretty well when I'm not doing a whole bunch of stuff, but I noticed I'm getting a little bit better with multitasking since I've been doing these from July. And I still find that sometimes once I'm off the live stream, I find that I've missed things. So, that's going to keep happening. But today, I think crude oil and gold are, they're pretty clean reads. The only question is now whether we're going to get enough momentum to actually drive these a little bit higher. So what am I looking for? Let's reiterate. I'm looking for 2600s to give me a bit of a mean reversion in gold. On the daily chart, we have the conterminous line, aka the demand level. We went through one demand level, and sometimes the mean reversion start from the second demand. So you smash through one, you get to the other one. That's an extended enough move for the market makers to go, we need to adjust. And then I found that a lot of puts are located around sort of 600 level. So let's see whether we can bring that back up from there. Right now, they're kind of trying, we still didn't make a higher high, but we made a higher low. So at least something's happening there. Not to say that, anything can happen, right? We still have these levels down here. That's still a danger that we go towards the algorithmic intraday ranges before we turn around. But these put supports, when they crop up this early, they can be pretty decent levels. So let's see what happens here. And then crude oil, looking for a value acceptance. So we need to close above weekly kickoff. I think it was weekly kickoff low, 68.50. That's Hoag's level. But I would also like to see the price pop into the value area from London yesterday, above 58. Above 58. If we get that, then there's a pretty decent chance of at least 70 ticks, maybe even a little bit more, but 70 ticks is all that I want from here. If these two both work out, that'll be my day. I'm going to go and do something else and not continue to trade because I'm going to be hitting somewhere closer to my daily profit target. Yesterday I managed to turn around this, so I ended up about 500 up on this one. I think it was 493 in my live, and then across some of the others they were a little bit smaller, so I think they were like 300 and 400, something like that. And I don't copy trade. I might do one trade that looks pretty good across like a couple of accounts, and then designate another time of day for a particular thing, because I do tend to trade through 2 sessions, and I want to give myself more swings at the in the day to try and express my position before running out of money. So yeah. Does the NQ count as an instrument? Well, you can call it a product, you can call it an instrument, but yes, I would say so. You need to learn how to operate it properly, right? And that's, I don't know, I call them instruments, Yeah. Nanka says, my grandmother was 29 every year. Yeah, I'm thinking of adopting that view in life. Just stay 29 permanently. Why not? It was a good age. Paul H says, hi dear, just got let out to play from a business meeting. Good morning all. Paul, very good to see you here. Very good to see you. Oliver says, also a multi-instrumentalist. Yeah, I find that there's a lot of musicians who go into trading. Yeah. Paul H says, you did a great job with Coach Ray and me. That was fun. So Coach Ray won't be able to be here with me, but I am trying to get Dakota on for Thursday. We're just waiting for confirmation from the production team. And also, tomorrow, I'm going to be on with Coach Jay for At the Buzzer. So I'm really looking forward to that. I love doing recaps and reviews because I think it allows us to look at the day objectively and just to kind of have that objective review without being in the heat of the moment. Because, everything is moving now. We're like, oh, is this going to work? What do I trade? Well, because I trade multiple products, so I have to decide on the day what looks the best. And I prefer it that way because I'm kind of a little bit like Coach Paul, actually. If you ever watched At the Buzzer, and if you haven't, please do, because it's amazing. We have Coach Jay and Coach Paul. Now, Coach Paul has been trading for such a long time. He's been trading for I think 30, 40 years or something crazy. And the way he trades like a one lot across many different things. Now, I have traded with size in my career, and I still do in my personal account, but for these sort of accounts, especially considering we don't have Eurex, I find it a little bit tricky to do the same type of performance as I have on DAX or some of these products, because sometimes they act weird, sometimes there's no movement at all. You enter a trade and there's just nothing going on. And then every once in a blue moon, they go on this massive run. And then again, nothing. So it's not a very good session for some of the products that are traditionally on the CME, and they consider COMEX their main session. So that could be a bit tricky. But to me, partialing my risk, like let's say I say to myself, well, I've got 3 position max size. And I don't know whether people have thought about this, but usually when they think, when I first start an account, I can only trade 3 lots. And then they plow into 3 lots in NQ, full mini, right? Isn't it better to maybe go, let's have a look at YM, ES, and NQ and to see which one looks better. And then partial your risk in those 3 instruments. You're still trading 3 lots, but you don't know which one will move. Sometimes NQ is range bound whilst ES is going on nice kind of orderly runs. Sometimes NQ and ES are range bound, but RTY and Dow are moving, So I never really understood that whole, desire to plow the entirety of your max lot position size, the default position size that either they set for you in the beginning or that they have on the account, to max out all of it on one thing. It's like, talk about putting your eggs in the same basket, right? So I've always been of the thought that if you are an advanced trader and you have a systematic approach, I'm not talking about intuitive stuff and all that. I'm talking about knowing what your setup really is. Like, for example, Coach Paul and Coach Jay, they have this urgency trade from VWAP. It's something that you can even code up. It's like, it's so good and so systematic that you can go, yes, that's what we're doing, right? So if you have something like that, you can go across some multiple products and just look for the same strength of setup. And that's where, putting one lot here, one lot there, one lot there. And to be honest, whenever I try to focus these days, like it wasn't always this way, but whenever I try to focus just on one thing, and then we run into a quiet period in the year, I get absolutely smoked, right? So this is why for me, having about 5 or 6 things that I'm looking at, and then just figuring out which one looks the best on the day is, for me, been much better. But if you're just a beginner, that is an informational overload. It will be too much, too soon, because you still don't know how your whole thing reacts and how it acts. So you need to learn first about the behavior of the product, about the setups that work the best for you, about things that have that you can read very easily. And then it's like, okay, so I have my setup. I know what it looks like because I've seen it a million times. I've traded it a million times and it worked out for me, let's say ballpark 45-50%. And I managed to get 2R out of it, or 1.5, or some kind of a statistically viable target. So because of that, if you're a beginner, probably just stick to one until you can really hone your skills there. Because there's honing your skills, and then there's diluting your focus. But just beware that I spent an extended period of time trading one thing. When I say extended period of time, I mean I traded Eurodollar for 5 years. Then I traded crude oil for probably about 2 or 3 years. Then I added gold, and for a while only traded gold for about a year. And then eventually all of that started to translate into other metals that behave similarly, and into RBOB that also has a very, very similar movement to crude oil, but it's a little bit more liquid, right? It's a thinner product, more liquid, and it can be pretty fun, right? So if crude oil is really kind of range bound, RBOB is what I gravitate to. But for now, crude oil is really kind of doing its thing. So, I'm back on speaking terms with crude oil. Okay, so let's see. Some questions. So, should I be trading NQ right now? I don't know. That's I don't like NQ in general, so I would say no as a blanket statement. There's very few people who can handle the NQ emotional roller coaster because it's such a whippy product. It's super fast. It's like we're talking lightning fast moves, not respecting levels. So immediately you need something else. You need to look at SPX options, or you need to look at ES, or you need to do something. All right, so this gold, let's see where we're coming from. Okay, so we do have a localized low here. So this probably won't work out, but last time we turned away just from there. Where is this Asia low? I'm just trying to figure out whether that was maybe the bounce. So 2601 seems to be troublesome for gold, and I'm just trying to find a reason why. Yeah, so we basically came up to around about that area, tried to go higher, and then went down. So gold probably still has some room to the downside, so I'm going to leave that alone, and then I'm going to try and focus on this crude oil thing here. So gold is a no. Now at this point, I will move away from gold, right? Not interested in it at the moment. Because my first idea at the first level did not work. I now need another level. And that level is not until we fall another, well, at least another 60 ticks, maybe even 100. So we'll see. Crude oil is the only thing that now looks the strongest. We're still sitting around that weekly kickoff high. Sorry, weekly kickoff low, I think it was. Yeah. So yeah, NQ and emotionality, I feel that you have to watch ES, you have to watch options activity, and a whole bunch of stuff. And to me, that's just like, there are easier products out there, right? Especially if you're new. But I know that people get so hooked on quick profits, and that's also a new trader thing, right? It's like, oh wow, this is giving me my profits and I don't even have to wait for them. Oh my God, I've found heaven. It's not heaven, it's an absolute hell when it's not working. And I've seen it in my coaching. You know, people come to me, they're like, yes, I made $7,000 today, and the next day I lost 20. So I'm like, is it really worth it? You know, is it worth it? To have like so much, I don't know. To me, it's just like, at this point, I'm just so sick and tired of products that don't follow levels, that don't do what they're supposed to do just with like one chart without you having to you know, do a special ritual to find the levels and convert them into NQ and, you know, get the overall thing. I don't know. It's like one of those things, if you have nothing better to do and you want a challenge, yeah, man, trade NQ. I'm going to be on with Anne-Marie for the reversal challenge this Friday. So I'm going to have to do the whole 5M and Q and all of that. I hear people have been asking for the two of us to do the reversal challenge. So you're going to get it. And again, the reversal challenge is something that's actually quite an interesting exercise of situational awareness. And I have done it before, just, you know, not because of Topstep, because I actually knew about it before. Whenever you're trying to unglue yourself from a bias, let's say that you're always long equities. That's a bias. And even though it's a justified bias because equities have, you know, an upward trend on most years, sometimes you need to be objective. And this is why I love teaching people on crude oil and gold instead of NQ and ES, because it's such a one-dimensional market on most days that I don't think it does anyone any favors when it comes to developing a situational awareness. It actually teaches you to have a bias, you know. Like Dakota says, you know, where do we buy? What is that? It's bias. And it can work in something like ES and NQ that do have that upward move. But then you go to trade crude oil. Most equity traders, they go to crude oil. They're like, well, what is this? How the hell do you trade that? They ask. And this is something that, you know, is perceived as a very difficult product. And yet for me, there's nothing more boring than an equity index that just keeps going up. So it's like on most days, what do? Well, we look for a buy. Only if the market state changes, you can go, okay, maybe we should look for shorts. There was a value acceptance. So, you know, we never popped the upside of the initial balance and the levels are breaking down. Do we have any, you know, any stuff that happened? All right, so I'm going to add to this. We're having some trouble reaching to the London value, but I do want to add to this. However, I'm going to do something that I normally do to control my position size, and I do have this personal data loss limit from like back in the day. So I'm just going to remove that for this purpose because I don't want to be like liquidated while I'm showing you this. Okay, so what I tend to do when I want to keep my disaster stop for now, but also have a slightly bigger size, I will use an intra stop. So instead of adding onto the position, I'm going to add here at my entry. But then to control that downside better, I'm actually going to go stop market sell. Okay, so what does that do? This limits your drawdown from like a full 700 loss on two lots down to about 540. So if this does turn around, now I'm just doing this to illustrate what I normally do when I'm adding two positions and how I try to get the upside bigger, because if this gets to 60 ticks, that's now 1.4k in favor of net maybe 540, 550 loss. So this is something that I've never seen people do. People usually add, and I will add as well if, like, let's say if it draws down so deep and there's not really much for me to lose out on by adding onto a position at that point. However, I believe that my stop loss is still placed at a pretty decent level, so I will add into the final sort of quarter of the position. But if that's not the case, if we're still holding on around the entry and I still feel like there's some juice there, and at least we haven't completely dragged down price action wise, this is something that I will do to control the downside a little bit better while increasing the upside. Again, it has to be case by case and it has to be very objective with price action. But now, even if this starts to fall, I don't care, because it's not going to be a huge loss. It's going to be a little bit of a reduction in the stop loss while increasing the upside. So I wanted to show you this because I don't think I do this very often when we're on here, primarily because I am so busy with like everything else, and it gets sometimes a bit tough and I forget orders and stuff. So it's happened to me before where I'm kind of talking and answering questions, and then I forget that I closed out the original position, but then I left a floating stop market sell order, and I'm like, meh. So yeah, again, D being a little bit older, Granny D strikes again. My brain doesn't work as fast, but I am kind of getting used to everything that's going on here. So yeah. Braz JL says, I love the scalps though. Scalps for me are for a range-bound market. Scalps for me in a trending day are ludicrous. It's like, why take 10 to 20 takes when the move is just giving you 100? It doesn't make it. To me, market state has to be appropriate for scalping, right? If it's not appropriate for scalping, you need to adjust your expectations and you need to adjust the strategy that you're using. Something that I see all the time is that people trying to do breakout trades on a ranging market, and they try to do scalping range-bound trades on a trending market. It's like something not adding up there. It's like, what are we doing exactly? Yeah, being high on hopium. That's what we're doing. Yes, that old trick. So because of that, I would prefer to see the day type first. So if somebody says, I love scalps, and then elaborate with on a ranging day. You never see that. You see people who are so married to their style. Oh, that's my style. I'm a scalper. It's like, yeah, that can be your style all you want, but why not be, a little bit more flexible? Learn how to hold trades a little bit longer when the market is giving it to you. That's probably one of the biggest strengths that I have. Flexibility to flip between styles. And again, it's not going to come tomorrow because I had to work a lot, especially on a range-bound day. That wasn't my natural state. Trading range-bound markets, I'm actually really good at it right now. But 7 years ago, I sucked, man. I was just like terrible. Range-bound day, I tried doing a swing trade. And inevitably, I would try and go into a breakout of the initial balance, of course. But then I noticed that if I stopped and waited for a little bit before I plow into a breakout of the initial balance, hey, I have more data to work with. And guess what? Most initial balance breakouts end up with a failed auction. So it's like, awesome. And when I started realizing that, I started doing the failed auctions and suddenly, again, started increasing the intraday P&L. I was still doing okay on the swing side of things because I have like a stock portfolio and stuff. But intraday, I was struggling with the inside days. And I was like, this is shit. This is horrible. I hate this price action. Until I was like, hold on. So that went from the edge of the initial balance to session VWAP. And then it went to the other side, to the second standard deviation zone. And then it did it again. Went back to VWAP. And then I thought to myself, maybe if I just limit my targets and be a little bit more patient with looking for where to go in, perhaps I can maybe make it work. And guess what? It took me a few months of practicing that. And now I'm really good at range-bound days. I love it. I'm like, wow, range-bound day, let's make money. But at the same time, I'm very good at looking at some of the more bigger targets. So if it gives it to me, I'm not going to nitpick over 30 ticks, but I know this could go into value acceptance, mean reversion, and definitely give me at least 70 ticks. At least, right? Maybe even 100, like I said. So why would I take, it just, I don't know. To me, it doesn't make much sense. But hey, you do you, right? Let's see some more questions. Hey, Dee, how useful do you find level 2 data? Been doing pretty nicely without it. Hey, if you do pretty nicely without it, just keep going. I am a nosy person. I want to know everything, and I've always been like that. So to me, if I can't figure out exactly what's going on, I'm not happy. I feel like whenever I get involved in learning a skill set, I've got to know as much as I possibly can. So that's a matter of preference, right? If you're happy with your results, if you are doing absolutely fine without level 2, awesome. Keep doing that, right? But to me, like for example, I entered this crude oil trade because I saw they had 106 contracts out of nowhere. Like, look at this. It has 7, 27, 31, 18, 47, 6, 31, 30. And then suddenly you see 106 contracts on the offer slightly further out. That's going to get hunted. And that kind of tells you the direction as well. It doesn't tell you that they're going to sustain above it. But that's where the liquidity is. I want to see that. I want to be like, yeah, that's going to get hunted. I want to front run that. And that's why I'm in this trade now. So to me, it's useful in that regard, just to see the liquidity as well. Like if we have a very, very thin day, which does happen on platinum sometimes. In fact, let's have a look. Yeah, so platinum right now quite thin. We actually have a 2-tick spread. So nothing on 55.3, nothing on 55.4. Then we have 2 at 5, 6, 7, 8. So very thin. So I would wait on platinum to maybe populate this up to about 10 to 14 contracts before I start trading it. Because if I try that on a live, and I do like trading platinum on live, I might start getting execution problems, right? But closer that we get to the overlap, the more contracts you start seeing. So platinum is a bit of a weird one because it's a metal, but it's technically listed on the NYMEX exchange. However, it uses almost like it starts trading with COMEX. So whenever gold and copper start increasing in volume, I see that the same thing happens in platinum. So it's a very bizarre sort of situation where it is a NYMEX product, but it's a precious metal. It's like, what? And it has an early close as well. I think it closes at 6:05 my times PM, and that's 12:05 Central. So yeah, to me, level 2 is useful. Is it needed? Personal preference. If you're doing fine without it, carry on doing fine without it. If you feel like you're missing a piece of the puzzle, then try it. All right, let me grab some more water. Here we go. Somebody pull porking it. Okay, I'm long 15 minis on CL. What, in a combine? I want to close them here and jump to a long on GC. What do you think? This is not a signal service. I cannot give you that as a, I think. I can only tell you what I'm doing. I'm not trading gold right now. Why? Because the level that I was looking at is not doing what it's supposed to be doing. So I don't think a long on gold is appropriate just yet. I want to see some commitment from buyers. We're not seeing that, but we are seeing the long. However, why are you long 15? Do you have a $300,000 actual account, or are you long 15 in crude oil in a combine? And if it's a combine, what the hell, man? You know? Like, that's so much size. Do you know how much money you would need to trade 15 lots? Like, and also, like, we have 4.5K drawdown in these accounts when we first start. If you've built up your live account or even the XFA to the point where you maybe have 50 grand, but even then, to me, that would be like 3 lots. It wouldn't be 15, okay? Because 15, you get slippage, you lose the entire 50K. I got stung during the FOMC. And I was, this was many years ago. I think it was 2015. So yeah, it's going to be 10 years. It's basically a problem with getting out of positions during high risk events. Now, today we don't have a high risk event, so I suppose it's a little bit more acceptable. But you're not going to have consistency trading 15 lots in these sort of accounts. Okay? If you're doing that and then you're wondering why can't you pass, why? Haste makes waste. Sizing up means more time. Like, you have to earn the right to trade 15, okay? Yeah, it's 150K XFA. So what's your balance in there? And, you know, if it's anything under 100K, that's a ludicrous amount of size to be trading with. Ludicrous. And you might get lucky, but that's not risk management. That's just, I won money yesterday, so I'm going to size up to max position size and I'm going to get it. And then smack, one event happens and you're like, I lost my XFA. It's like, you know, I don't know. To me, that's just a ludicrous amount of size. If you're going to do that, maybe try copy trading, because that would be, to me, you know, a little more sane to kind of partial the amount of contracts of 15 across 5 different accounts. Why? Because on a per account basis, you'll be managing your position better. And if that's what you're doing, it's fine. But if it's one account and you're maximizing it, that's very suspect. I'm going to say no to footprint charts. I don't like footprint charts. I prefer bookmap. I think it's too labor intensive. So, you know, I can see why some people like it. Yeah, Dan Eamon says 15 minis is nuts, especially during Globex. Would definitely take some time off of that. Yeah, I mean, some people are crazy. You know, it's what it is. Yeah. Yeah. What is my risk exposure per trade? 4% per available max drawdown to start with, and then around 3 to 4% per available account balance. So I don't give a shit how much max loss they give you or how much drawdown or personal daily loss limit you might assign yourself. Before, we used to have the daily loss limits that they gave us, but these days, honestly, I'm you know, managing my account how I think I should be managing it. And yeah, there's like, in my live, I did set like 1,000 personal daily loss limit, because I think that's appropriate. It's like, and just to give you an idea of how I trade in my actual account away from prop firms, like right now it's a sort of a higher 6-figure account. So I will use 0.35% per position size over there. But compared to that, I will be pretty aggressive with my position sizing in prop. That doesn't mean 15 contracts, okay? It means 3 to 5% of available account balance, okay? Or max drawdown. So take that as you will, but that's made me last for nearly a year now in my life. And what is your goal? Is your goal to blow up a load of XFAs and not be here tomorrow? Or is your goal to still have a live account with Topstep 3 or 4 years on from here? I know where my goals are, okay? Now, my goal is longevity and consistency over everything. And if that means trading smaller and maintaining the account, so be it. Now we have the ability to fund our live accounts with XFAs, which is what all of us are doing until the gravy train runs out and probably some regulators step in. But for now, that's how it is. You can do that. However, that's still not a good approach to be long 15 contracts in a crude oil crude oil XFA on one account, because it just doesn't give you enough room. Now, again, if you're going to say you have 100 grand in there, I'm going to be like, okay, but let's do a little math, right? So even, like, I don't know what, I'm just assuming that you use smaller stops. I'm going to assume that, because you can't be doing 15 contracts and using the same types of stops that I use. So I'm going to probably guess that you're more of a scalper. And if you are not, I don't even know what to say to that. It's like, that's so much size. I'm like a little bit shocked and kind of stumped to hear that. But if you're trading 15 lots on a 4 mini, that's $150 per tick. And if I were to do that, I use 35 ticks for my disaster stop. That's your risk per trade. 5,250 you're risking per one trade. What is our max drawdown when you first start an XFA? 4.5K. Let's even say that that you managed to get up to 15K. 15K. 3 days, you kind of caught a tiger by the tail. 3 days time, you're sitting on 15K in one account, one XFA. And you get it wrong, right? The day doesn't go well. You're not reading it right. What's going to happen? You're going to lose the 15K in 3 trades. 3 trades. That's how much room you're giving yourself to give back 15, 20K. Okay? Is that good risk management? You decide, right? Okay, so you're risking 15 ticks on crude oil. There we go. So let's do that. 15 times 150. So that's 2.5 grand. And if you start an XFA and you trade like that, you're risking half of your available maximum loss limit. So that's like, let me give you a real world example. That's like putting 50K of real money, $50,000 of real money into your brokerage account and then risking 25,000 on one position. Would you do that? No? Well, why don't you respect these accounts a little bit more then? That's my take on it. I'm not happy when I see people doing this, right? Because then they go, oh, I lost an XFA. And it's like a week later. Why do you think you lost an XFA? I did that jokey ASMR video where I was like, why you're blowing up things all the time, why you're blowing up accounts all the time, and 3 reasons, right? And I say, reason number 1, you're trading with too much size. And then I keep going, and then at the end of it I say, so stop it. So yeah. But yeah, that's one sure way to just blow up. Now, if you don't care, if this is not much of an expense for you and you're a pretty well capitalized person and you don't really care about blowing up, a few K that you paid for, then fine, no problem. But to me, that's just not, like, it's something that I, as an educator, would never tell people to do, especially because people look at trading as a way to get to a better position in life. You're not going to get to a better position in life if you're doing ridiculous things like this, because this is not risk management. And if anybody else is watching this stream and they see you posting, it's like, it might work for you and you might be like, I don't care if I lose this, but I want the upside. That's not being a risk manager. That's just looking at the greed, looking at upside, looking at just money that you could make over how much can you lose. Yeah. Paul H says, question, Heidi, if you have time, can you tell us how many setups you have after all these years? I have 4 after 4 years. Okay, so we did create some mechanical algorithms based on individual setups that I've had. We counted about 21. Okay, now I am including things like, for example, value acceptance. That's one. Failed auction from value low, which could be value reversal. So it's a type of a setup, but the level is the same. So as a human, you can say, oh, maybe I'm looking for a failed auction around the value low, but really it will be the same setup as value rejection. So let's call that 2. Then I have range bound setups where I will either trade from the smash of the session highs and lows, or from within the second standard deviation band. Depends on how the day sets up. So that's another 2. Then I have the initial balance breakout. So that's 6 now. Then I have the auction fade, so that's 7, and then there's variations of a level where that's coming from. It can be, an extended move back to the value area if we're opening outside of it, or it can be a move from the average session or daily range. So all of that adds variation and is an individual setup. So let's say there, because of the levels of changes, even though it's one setup, it's from 3 different levels. So yeah, and a few other things as well, bounce from VWAP. That's also one of them. But it's, I don't look at it as like, this is the level. Like I used to define it that way when I was learning, but at this point, this is more a matter of situational fluency for me. It's like, it's not like, which setup am I going to use here? And then go, no. But when I was learning and when I was defining what could happen, I absolutely use flow diagrams for that for myself, and I still do when I'm explaining it to people. So the way I teach people in the Pro Development course, it's a very statistically driven method that I use, that you see me do all the time. But when I'm explaining the situational awareness, I actually have like 4 different big playbooks, which are statistically sort of rare, but they tell you the best looking setup. So that kind of in turn goes to develop your skills of what a good setup looks like. And then within that, we can start to sort of figure out whether we are going to do a trade with the trend or maybe a counter trend, and whether the counter trend is too dangerous or not. So that's how I teach people. But at this point, my setups, yes, I do have over 20 of them. But they are more to do with just the situational awareness. It's like, how can I best position myself? What level is in play? And all of that. All right, so Magdo says it's 2.5% of my balance. Okay, so that's a little more acceptable. So you have... yeah, if it's 2.5% of your balance, that's fine. Just make sure you have some kind of a personal daily loss limit in there, because it is a lot of size. People coming in and trying to emulate that, it's not great. All right, so GC long, not yet for me. I don't use RSI. I use pure price action. So I'm going to stick with the crude oil, because this is something that I'm seeing as a price agreement here. You know how I said I want to see a range getting established around the level, and then maybe we can break through it into the overlap. So we do have value low here, some reaction, perfectly normal, but we are establishing a higher high, and now we are trying to establish a little tiny higher low as well. So it's still floating around that same 68.50 area. So I might stick with this. If it gets stopped out with a stop market sell, that might change my mind. But yeah. Okay, so I'm going to finish the stream here. Yeah, so let's... see what we have economy-wise. So economic releases-wise. Economy-wise? What the hell? When is the CPI this week? Because that's one of the things. Oh, God. We have Fed speakers constantly, man. We have Waller, Barking, Kashkari, Harker barking again. Jesus Christ, that man likes to talk. So yeah, a load of speakers today. That's going to impact gold and equities probably more than anything else. We had the German ZEW, or ZU, as some people like to call it. So that's already been out. That's a little bit down. What's DAX doing? See, once I come off stream, I start looking at my DAX setups. And then I usually pop one in by 11 my time, which is about half an hour. But let's have a look. It's failing the auction, yeah. So weak numbers and we're failing the auction. So that's in line. Maybe I can get something out of that. All right, guys. So doesn't look like we have anything today. We have CPI tomorrow. So, okay, we're going to have a look at that. Let's see what happens with the main part of the session. Let's see if this crude oil actually goes into another trend day or if we're going to get stuck in a nothing burger. Until tomorrow, I'm going to bid you farewell. So let's try to stay patient as always and try to, yeah, OPEC. I mean, OPEC is always yapping. They sometimes have dedicated meetings, but yeah. And tomorrow we have obviously crude oil inventories, but sometimes when it's a holiday, then they move it to Thursday. And that is exactly what they're doing this week. So we're not going to have inventories report until Thursday, I believe. I don't even see it on the oh yeah, it's there. Crude oil inventories, yeah. So 4 p.m. Okay. Yeah, so not the biggest day of releases. In fact, the releases are going to come tomorrow and Thursday. So maybe if we don't see any big trending moves and stuff, perhaps we might, get stuck in a more range-bound day. But it doesn't have to mean that way. Sometimes they are unwinding the positions ahead of these releases as well. But yeah, crude oil, so far, it's sort of ran up. It's trying to build up structure and momentum. Just going to show you here what I can see on my chart. So from Asia, and this is another reason why I'm kind of shooting for value acceptance, all the way from Asia, we started to reverse, and it's been pushing and pushing and pushing and pushing. So for me to just go, oh, let's go short, that's really not the best thing. So I'm still hypothesizing a value acceptance as a aftermath of the build up of this momentum trade. But yeah, let's see what happens for the rest of the day. Thank you for being here with me. Click like, click subscribe as usual. Caress the like button to show me that you are finding value in these sessions. And I'm going to see you tomorrow for another London session, and then for At the Buzzer. And then after that, you won't see me until Friday when we're going to do a reversal challenge with Anne-Marie and Dre. So that's going to be pretty fun. Enjoy the rest of the day. Enjoy the broadcast. This has been the London session on TopstepTV, and I'm Deeyana Angelo, aka Market Stalker D. Take care.